Ladies and gentlemen, welcome back to the channel. It is time to talk about SOFI stock because SOFI hit a new all-time low today and closed down 5.8% for the day. We got much bigger problems than SOFI stock given what we just heard from Microsoft and Google. It looks like a crash is incoming. Embrace for landing. We're going to talk about everything you guys need to know here in this video about SOFI stock as well as the broad markets. So if you guys find value out of this video, hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for tuning in here today, and let's get to it. So first and foremost, what is so concerning right now is Google and Microsoft earnings. And now Microsoft, a little bit of a different story. They're actually up 6% after being down as much as 6% after the earnings did come out. Now, what is going on with Microsoft? And we're going to start with Microsoft. Well, they beat earnings across the board. And it wasn't until just now that Microsoft actually started to be rewarded for that. And they are still saying they plan to buy Activision Blizzard for almost $69 billion, which is probably seen as a negative thing. And that's probably what was holding the stock back part in the beginning of after hours trading. But Microsoft did post earnings of $2.22 per share adjusted versus $2.19 as expected by analysts, and revenue of $49.36 billion versus $49.05 billion as expected by analysts. But here's the thing, with even Microsoft, they're good, they're beating estimates, but it's not like knock it out of the park good. It's not like, wow, what is going on at Microsoft? They are killing it. That's not really the reaction that you are getting. Now, with Alphabet, that's a much different story. So Google, on the other hand, their earnings per share came in at $24.62 per share versus $25.91 per share expected, and they did miss a lot of this EPS number due to the YouTube advertising revenue that did miss expectations, as well as a couple other things, but it wasn't all too bad. Revenue of $68.01 billion versus $68.11 billion expected. So it was a miss, but it was not as bad as it could have been given the state of the economy and where we are heading. The stock is currently down about 3.25% here in after hours, but it wasn't until extended after hours where we started to get a ramp up in the share price where the trading volume is very, very low. So it's easier to see these, rallies into the close of after hours because the volume is so low. Now, at one point, we were down 7% for Google. Now, the revenue miss was not all too bad. Like, it could have been a lot worse, like I said, given the state of the economy. But Google actually did announce a $70 billion share buyback program. And this is a lot like Apple. And I think if any stock was going to save the markets, it was going to be Google and Microsoft. And the same thing for Microsoft. You are seeing this extended hours rally, and it's off of low volume. So we won't know exactly how things are going to hash out until the morning. Microsoft looks decent, but, even Tesla was much better of a beat than, Google and Microsoft, and they sold off the next day. So we will see on that one. It doesn't necessarily look like Microsoft or Google is going to save the stock market. Even Microsoft was down like 3%, 4% at the lowest after this report did come out. So it's pretty neutral across the board, definitely being taken as a bit of a bearish sentiment. Now, why I am very worried at this point is if share buybacks mean nothing nowadays, if you just need growth, if that's all investors care about, if you're not growing, you're getting chopped, 10, 20%. That's not good, because what do we have tomorrow for earnings? Well, we have Facebook, PayPal, Ford, Qualcomm, Pinterest, Teladoc. These stocks are not expected to save the markets. If anything, PayPal and Facebook, they don't have the best track records for earnings, and you're likely to see some fear heading into those earnings, and then they're likely to be very, very bad, and then you'll probably get the market selling off again. Now, for Apple's case, I think Apple is going to be somewhat the same as Google in the sense of they miss for bottom line profits, and they missed for top line revenue numbers, but they announced that share buyback program. So depending how big the potential miss is at Apple, that's where things could get a little bit dicey, and why I'm almost certainly convinced that we will see Apple missing on top and bottom line revenue numbers is the Google trends, which we will talk about in 1 second, are not so great, but economists and analysts have been revising up their earnings estimates. So last quarter, it was expected, Christmas quarter, analysts were expecting 90 billion for this quarter for top line revenue number. Now it's at 94 billion. So they have increased that almost 5% here in the last 3 months, and I think 90 billion alone was going to be a tough bargain. Now it's 94 billion. That's going to be an even tougher bargain, and if share buybacks really mean nothing to investors right now, that's going to be a big problem. Same thing for Amazon. They're kind of in the same boat as Apple, in the sense of they are the two companies that would have the inflation pressures, right? Even the raw material costs for making iPhones and fuel prices for Amazon for shipping. These companies are really the ones that could be hurt by all of that, more so than a Microsoft or a Google, which is really cloud-based and has not really seen those inflationary pressures in the same way. Now, if we take a look at Apple and take a look at actually the Google trends here, you could see iPhone 13 falling off of a cliff. Google trends straight down. Apple TV, that's the one that is staying pretty neutral but still trending down. Apple Music, straight off a cliff. AirPods, straight off a cliff. Not looking too good. MacBook Pro, straight off a cliff. Apple Watch, straight off a cliff. iPad, straight off a cliff. The same thing, the same picture for all of the Google search trends for Apple's most sold products, right? Their highest revenue products does not look too good. And we are actually positive here in after hours now, which is very, very surprising. We did see Tesla down about 12% here in regular trading. So it was like a mass liquidation, a mass sell-off. Even Facebook in after hours down 2.3% heading into their earnings, and you are seeing Google starting to recover a little bit. Earnings calls are going on right now, and like I said, volume is very, very thin, so you only see like a couple thousand shares trading hands, or even tens of shares trading hands. Like some of these candles are like 20 shares that trade hands. So I would be very careful making any assumptions here that it's going to be a bullish reaction overall. I think it's quite the opposite. I think Microsoft and Google could have substantial sell-offs coming tomorrow, because after all, Microsoft earnings were good, but they were not great. Like, they were better than expected, but it wasn't like knock your socks off. It wasn't like Tesla earnings. And then Google earnings were just not good altogether. Tesla is getting a little bit of a bid right now. And we overall had a very, very rough day in the markets today. Now, if we do take a look at SOFI stock and talk about what happened with SOFI, you can see via my personal portfolio that SOFI was down about 5.5%. That's kind of where they're going to end after hours trading. PayPal was down about 5%. Square was down about 6.5%. So SOFI was in the middle. Did better than Square, did worse than PayPal. So I think that tells you something about the state of where SOFI is. You have sold off so much that I think the sell-offs will slowly start to slow down for stocks like SOFI. And then, coming throughout the rest of this week, if Apple butchers earnings, you've seen Google and Microsoft not do too great already. But if Apple and Amazon really butcher earnings, and Facebook, you're really going to be in for a market crash scenario. And you are already seeing margin calls right now, which if you look at the margin debt, it peaked out in November at $935 billion. Now it's still sitting at about $800 billion. For comparison, the low, during the crash of 2020, we were sitting at about $479 billion of margin debt. So we still have like $330 billion of extra margin in the markets comparatively to March of 2020. So there's still a lot of room to see those margin calls, to see that capitulation, and to see that just mass liquidations along the lines of what we've seen today. And it's really going to come down to Amazon and Apple at this current point. I would not get too ahead of myself here, and I don't want to make any firm conclusions, but these are not strong earnings. Like they're hardly skimping by even for Microsoft. So it could easily be sold off tomorrow or not. Now, on the other hand, you do have GDP numbers that come out Thursday before Apple reports earnings. Those numbers come out at 8:30 in the morning, and Apple reports obviously in after hours. You also have PCE, personal consumption expenditures, which is another thing the Federal Reserve likes to look at to measure personal inflation rate. So those are going to be two important data points that do come out. But on top of that, you got news today that Russia is cutting off oil and natural gas to Poland, Bulgaria, and it's rumored to cut it off to Germany. If that happens, you're really going to be looking at some serious economic slowdown in Europe, because those prices for those commodities will go up even more. That will lead them to a greater chance of going into a recession. So when you add all of this together, lots of uncertainty, companies are hardly getting by. It's not looking so good, but we'll see exactly what happens for tomorrow. As far as SOFI stock specifically, the option activity for the day was 71% positive, 10 orders totaling $2.86 million, positive order value of 71%. The short interest is currently sitting at 20.7%. Current shares that are sold short, 149.59 million. Cost to borrow max of 4.33%, utilization of 100%, and the days to cover sitting at 3.86. That's my daughter right there coming to ruin the video. She loves being on camera, but nonetheless, that is pretty much it. Same thing goes. Watch that $5 level at the for support. That's going to be a key for SOFI stock, and then to the upside, the key level is going to be about $10 per share. That's a psychological level, and then also the 100-day, 50-day moving averages, which is at $9.28 per share. Do you want to say hi? Do you want to say hi before we wrap up the video?
Bye.
She says bye-bye. So thank you guys for tuning in. Yeah, like I said, watch $5 and watch $10 per share. Thank you guys for watching, and I'll see you in the next one.